You are looking live at the Nasdaq from 2017. And I'm just showing you this. It's a review for the people at MC Stock Charts, those who signed up. But, a lot of people are making money, good money. If you're playing options, you're making fabulous money. And people want to know, how long is this going to last? Well, making money in the stock market is not a linear process. You could make no money for 6, 8, 10 months, and then all of a sudden in 2 months, make a year's worth. So that's kind of what we're in now, but I'm showing you 2017 because we could be in a similar type of pattern here where, let's start in 2017, Marty. Okay, here's 2017. We have a run up, you have little pullbacks, just less than 5%, I believe, all year. Runs up, little pullback, 3, 4, 5%. If you can't handle a 3 to 5%, sell off, geez. I mean, you shouldn't be owning stocks because it's going to happen. They run up and then there's profit taking, and they run up and there's profit taking, and they run up and there's profit taking. But this thing, it respected its moving averages for the whole year of 2017. And I did that little exercise because people asked me, like, what can we expect? What's going on? Making good money. Is it going to last forever? No, it's not going to last forever. But it could last all year. I believe if this is where we're at right here in March 1 of 2024. And, we started this rally back here and we had that end of the year sell off, the no Santa Claus rally. But since then, we just had these little pullbacks to the, the 21. So you always got to watch 21 there. There's the magic number. But, as long as we keep, pulling back to a rising 21, we're going to be making money. So anyway, I just wanted to point that out. There is a precedent. I don't know what's going to last forever. I think the one thing that is the thing you have to watch out for is inflation. If inflation rises, but the Fed could stay where they're at all year. The economy's strong. People are making money. People are working. Stock market's hitting highs. There's no reason for the Fed to do anything unless inflation rises its ugly head. So watch your gas prices, watch your food prices, just watch all prices, and be vigilant, be humble. Be focused, have a routine, stay in your routine. You got to develop a routine in this game. I'm going to talk about that later, but anyway, I'm going to go through some stocks. I'm not going to deal with all the indexes. They're making highs, so that's a bullish sign. A lot of different groups are making new highs. Industrials, construction, materials, obviously the technology, biotech, just a lot of areas hitting new highs. And, I believe, you have to have a thesis to have conviction. I believe we're in the early innings of an AI revolution, and I'm going to stick to that. This is not 1999. I'm going to get to that a little bit later on as well. But anyway, I'm looking at a chart of NVIDIA. It did not make a new high last week. Traded at a new high in after hours, but let me see, I haven't done this yet, so bear with me. Yeah, on this Friday, it made a new high in the morning. This is the 23rd, and then it pulled back severely. It made a high of 823.94, then pulled back the rest of that session. And then last week had a good week. So if you go to the weekly on NVIDIA, it had a good week. It was up 4.39%, but did not make a new high because that Friday spike and then the sell-off. And that's this day here, 823.94. Yesterday, the high was 823. So it just needs a little chip shot to make a new high, and perhaps it'll do that on Monday. We'll have to wait and see. But anyway, NVIDIA broke out on January 8th, I believe it was. Yeah, went right through that pivot point on a Monday morning. I remember it well. And it's just been respecting its moving averages the whole way. And this is why I say, well, we're in this type of a market. These pullbacks are to be embraced and not feared. So if a stock comes in a little bit, that's your chance to buy. These strong stocks are not going to form bases and allow you to get in easily. These are going to be hard to buy. You're going to have to, have some courage, some guts, and conviction to buy them on pullbacks and hope they trade higher. Speaking of which, SMCI last night was announced that they're going to be joining the S&P 500 later this month. It's one of our leading stocks. Today, I'm just going through my leading stocks at MC Stock Charts. Then I'm going to go through some other things later on. But SMCI is my number 2 stock. We added it January 20th. I always do it. I update on Saturdays. You should do the same. Audit your audit your portfolio and kick out those ones that are not performing. You know, your stocks should be performing right now. They should all be performing. If not, you know, get rid of them and buy something that is performing. This, you know, people ask me if this is a high tide flag. I would say yes. You know, in spirit for sure. You know, they went from what 350 to you know 1,000 or more and change, and then pulled back, and it's kind of flagging here. So I could see why you would, you know, think that's a high tight flag, and you know, I would definitely say yes. Although there's nothing tight about it on the daily chart. It traded from you know 1,077 recently, and then 2 days later, it made a low of 692. So that's what even I can do that. It's more than 30%. But it's kind of tightened up. I was teasing that it's tightened up, that it, you know, the other day it just had a range of the high was 846 and the low was 812. So, you know, $34 range. It sounds like a lot, but for $1,000 stock, you know, not really. So it's tightened up, pulled back to its 10, and now it's bounced higher. And I think with a stock like this, and you know, a lot of people, you know, there's the bubble heads and the crash heads out there saying it's going to crash, blow off top, you know, but you just look at the 21, and if it's trading above the 21, I think, you know, and the 21 is rising, you know, 15, 20 bucks a day, you're going to be making money. If the 21 is rising and it's above the 21, if it falls below the 21, then, you know, it's another story. But I would say, looking at history, a stock on a late stage base, this is definitely the last stage for this one, I believe, but it's not going to end after 5 weeks and blow off. You know, pulled back, yes. Profit taking, yes. Had an inside week. It was still up 5% last week, and the week before it was up 7%. So yeah, maybe it did have a blow off top short term, but there's no reason why this thing cannot make new highs, and I think it will. You can see after hours the action, it's heavily shorted. You know, you can see the short interest in this one. They're going to have to cover at higher prices, so they're going to buy it back, because you can lose a heck of a lot of money shorting a stock like that. That's enough for SMCI anyway. Yeah, it's going to be wild next week. There's going to be fireworks, you know, and going into that index, I'm pretty sure they're going to have a couple of catalysts besides funds buying it. It's not liquid enough. I think they have to split the stock, and these guys can raise guidance at any time. The CEO already, you know, they guided to 15 billion, said they could do 25 billion this year. So they've got a lot of wiggle room to raise guidance. And I think these guys are just toying with the market at this point. Elf Beauty, one of my favorite stocks. You know, this thing has done really well for me. I'm really surprised at how it's been performing. Recently, somebody was asking if it had broken above you know, an upper channel line. I would say no. I mean, if you're really short term, you know, I don't know how much ADD you guys have, but you know, if you're really short term, you say, yeah, broke above. But you know, come on, let's look at weekly charts. This is a weekly review. And I would say definitely not. If you wanted to start from back here where this breakout came, yeah, I would say it did. And then it formed this base. Okay. And then since it made this base here on the weekly chart, it's just kind of grinding higher. Yeah. It's short term, you know, it's a little extended, but I would say longer term, this thing's got a long way to go. It's a 12 billion market cap stock. I mean, this thing could, it's been a 26 bagger since 2019, like 4 years. And I think it could be, you know, another, I don't know, at 12 billion, it could be another 5 bagger, get up to 60 billion. I'm not saying it will, but it certainly could. Really popular products. Anyway, you know, it broke out on 12/13. We added this on 12/15. Like I say, I do that on Saturday. So it broke out on 12/13. There it is. And then I added it on December 15th, that's Saturday. And it's pulled back to the 21 one time, two times, three times, just minding the 21. And now it's just showing incredible strength. I trimmed it. And some other people that you know I work with said they had trimmed it too, and they regret it. I don't regret it because I still hold it, and you know, I use the profits to invest elsewhere. But you know, I like my stocks going up after I trimmed them. I don't care. You know, I don't want to see them fail, and I don't think Elf Beauty will. If it pulls back, I think that'll be an opportunity. Anyway, enough with Elf Beauty. Broadcom, boy, gosh, I hear people arguing about NVIDIA and AMD are overvalued and Broadcom's the one to own. I would say probably not. You just go with the ones who are strong. And this had an ascending base pattern, and then it pulled back to its 21. You can see it's being supported by the 21. Then Friday popped nicely. I believe it got an upgrade and, $1,400 stock. They're going to earn what, $50 in earnings last year. So yeah, not real expensive. They're doing probably about a third more revenue than AMD. But anyway, I don't really want to compare the two. If you own Broadcom, fine. If you own AMD, fine. I don't think you can argue with either one. Obviously, NVIDIA is the king of AI. And that's one to own as well. This one was forming this base. I had this on the ready list this week. Kind of like it broke above this, a downtrending line here on Thursday, but really this is just a kind of look at the week. This is a weekly chart. This is just like a flat base pattern for like 6 weeks here. And then last week, it was up 14, nearly 15%. So congrats to the longs at AMD. It's first time closing above $200. So this is going to earn $5 next year. Yeah. So maybe it is more expensive than Broadcom, but you can see they have the accelerating sales growth where Broadcom doesn't have that type of growth. Anyway, I'm comparing them, and I told you I wouldn't, so I lied. Meta Platforms, this one formed a shelf pattern. All it did after its massive move following its earnings report, it just formed this little shelf, and it was up 20% with 375% above average daily volume, formed this shelf, and now broke out. It was surfing the 10-year. Broke out on Friday, first close above $500. So congrats to the longs at Meta Platforms. Spotify, I was speaking with Blue Chip Larry this week with Rosanna. She made a little video. And this is one of Larry's favorite stocks. He says he subscribes to Spotify and he was going to cut back on his family budget. This would be one of the last areas. This one and Netflix. I don't use Spotify, so I don't know. But this one is Kelly Slater stock, just surfing its moving averages. And that's what you want to see. So another Kelly Slater stock, or I could go Laird Hamilton either way. Abercrombie and Fitch, they're reporting earnings this week. And this is not an expensive stock, although it's up, whatever, tenfold in the last, year and a half or so. They're doing over $1 billion in revenue a quarter, $4 billion. The market cap $6.5 billion, 1.5 times sales is not expensive, folks. So I want to see the reaction to the earnings. I'm hoping that it has a negative reaction and pulls back a little bit, hopefully to the 50. I doubt I get that lucky, but I'm definitely watching for a negative reaction there from Abercrombie and Fitch so I can get in. If it goes higher, then oh well, I'm not going to entertain chasing performance. So I don't think you need to do that in this market. This is Arista Networks. Pullback following its earnings report. You can see this violent reaction. Like I say, you don't be afraid of pullbacks. So this is what I'm looking for in this market. Stronger stocks pulling back to its 50 and it just resumes higher. Arista Networks is an AI stock and doing really well. Computer networker. Novo Nordisk, I should do these two together, but I don't have them the same on my this is my leading stock list that I'm going through today. I added Novo Nordisk on December 22, which was a Saturday, probably after this breakout. But anyway, this one, had this base. It did not appreciate with the Nasdaq, which Nasdaq started its rally. The follow-through day was November 1, and this thing was just consolidating in a base. As soon as we hit January, it started ramping. There's a lot of things going on here with this company. They just bought Catalent for $16 billion, I believe. So that's 3 manufacturing plants in Belgium, Italy, and North Carolina. They're going to be manufacturing Kings, and also they're going to get approval, I believe, pretty soon for renal kidney failure and cardiovascular disease patients. Cardiovascular disease is the #1 killer in the world, and also they're working on, Viking this week. Definitely has a better compound than Novo or Lilly, but they're way behind. So somebody's gonna have to buy Viking to even get in the game. But Novo is gonna have a pill form of this, and they're going to have a shot like a vaccine where just once a year you just go in, you get a shot, you pay for it. And if it gets approved for cardiovascular, Medicare is going to pay for this drug. It's all the same drug that they use for all these different diseases. Once they get approved, this stock has another catalyst or 3 coming they're thinking long-term. This management is thinking long-term. Novo Nordisk Holdings, which is a company that manages their funds, has billions of dollars, bought Catalent for 16 billion, and they said they're going to do 7 billion in purchases for the next, I don't know, 10 years or something. They're really planning on being aggressive in this market. Anyway, you can obviously tell I like Novo Nordisk, and it's being supported at the 21. And it's a weekly review, so we could just say it was kind of flat last week, formed this 3 weeks tight pattern. So yeah, just pretty much flat last week. I'm looking for big things from Novo Nordisk. A lot of people were asking about ServiceNow. This thing formed a 3 weeks tight, after I got to go to the daily here because it made this big, run to a high and then pulled back to its 50, which is fine. And now it's formed this 3 weeks tights pattern. But people are complaining, it's not outperforming, which it's not. It had a big run and now it's kind of flat, and all runners need a breather. So if you're not happy with the performance, you can always, buy something else. It is ready to run. I'll get to that maybe a little bit later. Or at my site, I have quite a few stocks. Anyway, I got to move on from ServiceNow. ESTC, they reported a phenomenal quarter, but it got ahead of itself. It formed this flat base pattern with a 118 buy point, and then it ran higher. And when stocks are running higher and making new highs into the print, there's probably going to be some profit taking. They reported, triple digit earnings growth. They have accelerating sales growth. They did nothing wrong. They guided higher. It's just, profit taking. Now it closed below the 50. So I was tempted to take it off the list, but I'm going to watch this for another week and see if it can rally back through. And I think it will. That 118.24 is still a valid buy area. So don't freak out because the stock pulled back after an earnings report. We've seen some crazy earnings report. And I know that's a bearish engulfing candle, but I'm still going to watch this. 14% off that high that I'd mentioned earlier. Anyway, Datadog, this one fared a little better following its earnings report. Not dog, Datadog. Thank you, Market Smith, or Market Surge. It's Market Surge now. Datadog, you got to look at the weekly chart. This is a weekly report. You can see the consolidation, coupled with handle, paint by numbers, buy point of 118. This one's doing nothing wrong. After the breakout, pull back to the 50, pull back to the 50. So you don't want them pulling back to the 50 too many times. This thing's going to have to start performing too, or it's going to get kicked to the curb. Cybersecurity stocks are starting to worry me. I don't like the way they're trading at all. This is CrowdStrike, the only one that I have left here. I kicked Palo Alto and Zscaler to the curb. This one sliced its 50, pulled back to its 200 after the CEO said there was fatigue in cybersecurity spending. The reports don't, indicate anything like that from OKTA and Zscaler. But this was good for a trade from like 280 to 310, nice swing trade, but it got rejected at the 50 and pulled back. So it's adios muchachos for me. That was a nice trade that we had at mcstockcharts.com. But yeah, I'm not interested too much in these cybersecurity names. They want to trade like this. CrowdStrike is the best of the best, I believe. Pulled back to the 50 for the first time since this breakout from 160. And it found support there and bounced through its moving averages, but now it found weakness yesterday with the Zscaler report, and they're reporting this week, Tuesday. So to be honest, I'm expecting a pullback, no matter how fabulous the numbers are. I just do not like the way these things are trading. Maybe, they need to base, form another base like this. That would be fine with me. Eli Lilly, this is ditto. Novo, I'm not as bullish on Lilly as a lot of people. I like Novo better, but a lot of people like Lilly, and it had a $1,000 upgrade yesterday, from Bank of America, I believe, and maybe it'll get to 1,000 here, but obviously a strong stock. It's got more in the pipeline than just the weight loss drugs. Pull back to the 10, found support. It was up 3% on Friday and 1.5% for the week. There's nothing wrong with Lilly. It's a great stock, but I just prefer Novo. That's just me. You guys can buy Lilly and make a ton of money with it. I just have a hard time. I own it small. I own Novo big, so perhaps I'm just completely biased here. I can't decide which one to own, so I bought both. This is Uber, another one of our leading stocks here, number 16. I added it January 13th. And it's been a great stock. Probably after earnings, I don't know. This that had news and moved up on this date, but definitely surfing its moving averages. Another Laird Hamilton stock there. I have a Laird Hamilton story, but I'm not going to get into it right now. Try to stay focused. I said at the top, you got to stay focused. This is VRT, Vertiv. You know, the AI revolution, data centers, power, diversified operations, I mentioned at the top, construction, all growing great. Caterpillar's in there, and just a lot of those old names, GE. This is the data center play. Definitely a strong stock. It had a pullback here after its earnings report recently. There's your move near the 50-day and the 10-week line. So, and then now just, there's buyers and sellers in the market. That's it. And then there's more buyers and more sellers. Then there's more buyers and sellers, and your stock's going to trend higher. And this moving average, relative strength line, everything's moving in the right direction. This isn't a power trend. And once again, this is not going to form a nice little base for you to buy it, cup with handle, and you could just go in there and buy it easily. No, you're going to have some courage and conviction and buy on a pullback. And that was a nice one right there. Netflix, I have this one on the list. It's the king of streaming. It's like, well, I don't want to be non-PC here, but it's just, it went up with earnings, formed this little shelf type pattern. Yeah, okay, I'll say it. It's like being the tallest midget. Anyway, it pulled back to its moving average and now trading higher. First close above 600 in many, many moons. You can see here this big consolidation breakout from here. So Netflix, fantastic stock. And the king of streaming, and it broke out, formed that shelf, moved higher. Deckers, how come both of my stocks that are on my leading list are going into the S&P? Maybe we know what we're doing. This is Deckers. Maybe not. Maybe I'm just clueless and getting lucky. This one broke out of a base, ran higher, then pulled back to the 50 for the first time. And whenever you see that in uptrending market, that is a gift. If I could spell gift, I would just write it right there. Gift. This is a gift, folks. G, I, F. And then we got the T, right? This is a gift. That's a buy right there. And then what did it do? Ran higher, running higher, making new highs into the print, made a high of 903 and just pulled back to its 10, surfing its MAs up after hours. You can see nearly 5% because it was announced it's going into the S&P 500 later this month. So Deckers, monster stock. I like looking at the monthly charts on some of these. Deckers, one of my favorite monthly charts. NVO's another. Whoops. See, I'm not focused. I lose focus here. Sorry about that. Amazon, that's a good monthly chart too, huh? I don't know what to call this anymore. It's a retail internet, but really it's a cloud play, right? With the Amazon Web Services. They just got the NFL contract. They're spending a lot of money, but doing well. This is a stock that I really like. That's why I have it on my list. Had this consolidation. It's been moving higher with the index, pulled back to the 50 for the first time. What did I say that was? After a breakout? It's a gift. Pulled back. What did it do now? Man, it's running. So yeah, remember the gift. Microsoft, this one I just included. I'm not a real Microsoft fan, but I acknowledge strength. And this one, broke out of this consolidation, pulled back to its moving average, doing nothing wrong. It's got the high of 420. Get it? A high of 420. All right. We like stocks being supported at moving averages. Another stock I'm not thrilled about, but I have to acknowledge strength. And that's Palantir. Many people thought it was going to go into the S&P, instead Supermicro and Deckers did, and it's a little disappointing. So, there was some profit taking after hours. I don't think that's going to bother anything. It just ramped higher following earnings, pulled back to the moving average, not doing anything wrong. Probably will continue to make new highs. And my last two stocks are Wingstop, restaurant stocks. That's another Kelly Slater stock. Just surfing the moving averages. And Chipotle, same thing. There's a lot of restaurant stocks doing well. I didn't mention that at the top. Anyway, that's it for me, except for I lied. I have one more thing. In honor of the great Steve Jobs, I have to go through some of these gaps higher, because when a stock like Dell, this is like partying like it's 1999, but it's not 1999, because these stocks have earnings and revenues. Back in 99, they were trading on eyeballs. You just build a website, have a .com, and you got a 10 billion market cap. This is nothing like that, folks. These are real companies with real earnings, and we were at the beginning of an AI revolution. If you read the DELL report, and I got to listen to the conference call, but this is a game changer for this company. That's why you saw SMCI and AMD and NVIDIA partly, up yesterday because of that report. This is 89 billion market cap. Man, this thing went up 32% yesterday with massive volume. This is not to be ignored. Just in my history of trading stocks in a market like this thing's probably going a lot higher. I don't want to sound too bullish or, be too cocky or anything. But yeah, just go read that report, and yeah, congrats to Dell. Anyway, that's one of the stocks that gapped higher. Now, EME gapped higher. This is IMCOR, but this is not out of a base. Okay, and so I'm a little more skeptical of this because EMR, which is another one of these diversified operations, this gapped higher out of a base. So I like stocks that gap out of bases, and not like EME, just, it's already ran a ton, right? And then it gapped higher. So it could probably run higher. It probably will, but I just prefer stocks that are closer to moving averages and closer to their base. And so that's why I prefer EMR over EME. So anyway, that's the way it goes. That's my story, and I'm sticking to it. Couple other ones that gapped higher. I mentioned the restaurant names doing well. This is Shake Shack, gapped higher. And this one just, I thought I was going to have trouble with 100, and it went through it like hot knife through butter. So Shake Shack, definitely a strong stock. You can see this, breaking out of a base again. Once again, this is a long period of consolidation, cup with handle, blasted higher, and it's continuing higher. So congrats to the longs there. ACMR, this is one that gapped higher out of a base. So I like this one. This is a big move, 40%. With, you can see the volume profile there, and obviously there's more buyers coming in. Maybe they're short sellers. I don't know. But yeah, 12% short interest according to MarketSmith. So this thing could run for a little bit. A couple other ones, and I'm going to stop here because they're kind of similar. And you can look, at the stocks that are up with volume, and stocks breaking out from bases. This is Duolingo, looks fantastic. Celsius, a lot of people were in Celsius, and this one we had it, a lot lower, like at 50, I don't know, 53 or 54, and then it had the standard buy point early entry, and then a standard paint by number 68.95. Then it just blasted higher on Thursday, and then it made another new high on Friday, then pulled back. So there's profit taking into the weekend. But Celsius, fantastic earnings report, 95% sales growth. That's not going to continue in perpetuity, but and even if it slows to 40 or 50, this is going to be a long runner, I believe. And it has been. It's been up a lot. Okay, a couple more that I need to get to before I quit. I'm a quitter. NTAP, this one closed at the low of the sessions, which I don't like, 5% of its daily range. But, it's Friday, and, there's profit taking, still up 18% with that volume. The RS line, pointing straight up. So NTAP looks good to me. JANX, I'm going to get to a couple of, this is a cancer one. This one ramp 229%. Thank you very much. And then since I'm doing this activity, there's a bunch more of them. I'm not going to do them all. I have to do Viking though. This has got the compound I was talking about, better than Lilly and better than Novo, but they don't have the money to bring it to market. It's expensive, but it did ramp that 121%, followed up the next day 11%. Then they had a secondary offering. They announced it at $85, and what do you know? The thing closed at 85. The secondary was oversubscribed by 5 times by Leerink and Morgan Stanley. Just had an inside day on Friday. This is an outstanding candidate to be taken out. Right now, it's an 8.5 billion market cap. It's probably going to take 15 billion to buy this thing. from, I think Merck or Pfizer should get in the game here really quickly because the price is going up. Once the secondary is absorbed, this is, I don't want to make predictions, but this is highly likely to go higher. You can see that breakout from this base here on the weekly chart. That's a fantastic looking base here. Little sideways action and yeehaw. Anyway, that's it for me, except for I lied. I have one more thing. You know, I've been looking at this stock, AQST, and I never, this is in the honor of the great Steve Jobs, by the way. One more thing. It was up 65% last week, but that's not what attracted me to it. Every night I start, you know, part of my routine, I talked about at the beginning, having a routine. And at night, you know, I do screens, but I usually go, you know, straight to, you know, up with volume, and you see 543 stocks. Sometimes it's 300, sometimes it's 1,000, depends on the market. But I can go through this pretty quickly, just by looking at the amount, you know, the price change. I'm not really interested in 2, 3, 4, 5%. I'm not interested in exchange traded funds. There's a lot of those in there, but I am interested in stuff like DELL. You know, when I see stuff like that. So that's what attracted me to AQST. Write that ticker symbol down. It's rare that I ever entertain any stocks under $10. But I started there with the up with volume. That's why I showed you that. And it was up with volume back here, here again. And so I'm thinking this thing keeps showing up, you know, in the up with volume profile or screen. And so, you know, yeah, it's up 11%, you know. So I looked at the website. The first thing I do when I'm interested in a stock is I look at the website, like what's going on, what do they sell, what market are they in? And then I, you know, research it. And I stumbled across a couple people on Twitter or X that knew quite a bit about this company. So I really started getting interested in it. And I bought some just as a goof, just so I could keep it on my radar. And lo and behold, this thing has been ramping. So I thought I'd just mention this name. You know, you could write it down. You know, it's cheap. You know, price wise, $4. It doesn't have any. You know, it's not like a you know, blockbuster earnings or sales, but that's coming. I suggest that you go to their website, listen to the presentation from the Oppenheimer conference on February 13th. Just go to their website at questive.com. Go to investors. Scroll down to presentations. Hit the February 13th Oppenheimer, and it'll give you a good picture of what they're anticipating. And I don't think it's going to be at $4 for very long. That's all I'm going to say about Questive. Anyway, that is it for me. That's my weekly review. Thank you for watching at mcstockcharts.com. We never give up.